All right, we are live for the Friday edition of the Morning Check-In. And as always, looking forward to connecting and sharing with you some things that caught my attention and I guess the coordination or the linkage of all this millionaire talk, how it's being driven by a very small few. And I want to share my thoughts on it. And as also provide some warning for those who might be in that camp of individuals that really believe that this mirage, as I want to use the term, is sustainable. So as always, looking forward to connecting and want to make sure that I'm flowing on all channels before I decide to move forward. So let me know if you guys can hear me in the chat. For those who are plugging in, definitely put a comment in the chat so I can make sure the audio is going well. And feel free to drop a comment or something like that if you're watching a replay or whatever. But I have about, let me see here, 7, 8, 9, 10 articles, all relevant to what I want to highlight today, just because I've seen two different scenarios of the words millionaire being mentioned. And what concerns me most is that it's okay when you look at the screen in this current environment and things are trending upward. But as always, due to the unraveling of the system or an event or whatever, there's always a correction. And that correction, I think, will be more catastrophic as well as severe as far as the steepness of the decline in the days ahead. And so I wanted to share my thoughts on that. And yeah, just to continue to encourage people to never forget the world of physical, tangible assets, and in particular, the commodity space where gold and silver will eventually have the laugh or the laugh say so, if I might interject. But anyway, let's get into it, man. Hope everyone's doing well and looking forward to connecting, man. Appreciate you, Lima Charlie. How you doing? If I'm not mistaken, is that you're in Lima, Peru, or what? Let me know in the chat. But as always, I want to make sure I continue to remind people of the resources available through the channel. And so I'm going to start off with that and then get right into some of the headline action and just paint the connection between all this millionaire narrative stuff that's going on right now, just because you can't ignore this type of stuff, in my opinion. So it's going to be a good morning, people. Going to be a good morning, and definitely make sure you guys hit that thumbs up button. Show your love for the channel, man. Appreciate all the support. Appreciate your attention and everything else. Without further ado, let's dive right in, man. Let me make sure before I get into why it's important to actually rethink some things in reference to this whole index funds and things of that nature. Let me start off with talking about my people over at Colonials Metals Group. So as you can see on the screen here, colonialsmetalsgroup.com, partners over here that help the community basically diversify as well as take a different approach towards preserving, protecting their financial retirements in the form of a self-directed IRA. And it comes in many forms and fashions, but ultimately it's a chance to diversify out of just stocks and bonds and actually get into physical gold and silver that you can either have stored in your own possession or at a depository, whatever you feel more comfortable with. But then again, it's about thinking long-term, and especially what I'm about to get into today with all this index fund and how it's ultimately being propped up and pushed by the Magnificent Seven. And so long as those tech companies are doing well, people's portfolios are doing well. But at the moment something happens and those seven are not doing well, then you can expect your 401k, 403b, and everything else also to reflect that. And that's why you want to have a diversified approach, in my opinion. So if you're interested, I want to encourage you to take the time to fill out this form here. Links in the description. Contact the experts, let them walk you through scenarios, ask them questions on how you can avoid such things I'm about to talk about today. And then also you'll be in a better position to actually have something physical to weather the storm for the days ahead, because gold and silver in tangible form doesn't disappear. It doesn't go to zero or nothing like that. Might have a correction, but then again, as a result of monetary policy, it will definitely be higher. And so we're witnessing gold at all-time highs in all currencies. Therefore, that lets me know that we're going to have more than just a stock issue. We're going to have a currency issue as well. So find out more. Click the link in the description, and you can plug in with the experts and then get your questions answered. And also, if you guys want to, give them a call at 888-521-2448 today, or just go to colonialmetalsgroup.com/RTD. And yeah, you'll be more than on your way to protecting and preserving your financial future. So just something there for my people who want to check in. Okay, loud and clear from Military Speak. Appreciate you, man. Thank you. Lima Charlie. Okay, I'll peep that. Okay, so let's jump right in, man. Yeah, so this morning, PCE figures out the metrics that they use is designed to keep a certain narrative around how they're in control of everything. But basically, we know there's a different story. But what I really wanted to talk about today was just some of the headlines and then some of the narratives that have been formed in reference to the amount of wealth that people are experiencing, both the average Joe and Jane, which is a very small few, and then also Nvidia employees that have been reaping the rewards of this overvalued AI boom that's underway, which I believe our government and all of Wall Street and the tech industry in general is using to prop things up, literally. And as long as things stay propped up, as long as the currency continues to flow and the share buybacks continue to occur, then there should be nothing to worry about. But then again, it can't last forever. We all know that. And based upon history, whenever things falter, they hit hard. And so I want to just continue to warn people and put together these graphs and stats here so people can realize that this is just not my opinion. This is based upon a lot of information here that is relevant. So let's jump right into it. Also, for those who may not be familiar, it's been a while, but let me share with you those who have an interest in getting something physical. So we have a couple different options, but one of the most, I would say, entertaining options that I have as far as physical precious metals for those who might like numismatics as well as collectibles. There's the 2024 Trump medallion slash round that you see on the screen here. And so for those who find this to be very an attractive piece, I must say so myself. It is quite fine to say the least. So if you're interested, links in the description. You guys can go grab us a couple of those. Definitely reasonable and affordable. So check those out if you're interested. And also, I want to make sure I remind people of the RTD Silver team. It's been a minute since I've talked about this, but once again, for those who want to allocate in an automated fashion to their stack, here you have here on the screens just some members of the community here that actually have physical silver in their hands. These are the average Joe and Janes. These are the non-tech savvy, those who realize the importance of having silver and gold. So if you're interested in joining the community, links in the description, and you'll actually be able to accumulate ounce by ounce, 5 ounces, 10 ounces, whatever is suitable for your budget, to where you'll have something tangible in your hands that you can feel and that will definitely withstand the test of time. So if you're interested, RTD Silver Team, links in the description, check it out, and you won't be disappointed, to say the least. Okay, let's get into it, man. Here's a story that caught my attention today. Stock market today. U.S. stocks rise as Fed favorite PCE inflation print hits the mark. So once again, they're always going to get what they're looking for because they are the ones that set the metrics to determine these figures. And so when I saw a stock market today, I'm thinking like, man, like U.S. stocks rise, and then it plays into the whole millionaire talk that we're hearing more and more about. And so just real quick here, let me glance at what I'm referring to here. So on the screen here, we have the S&P 500, the top 500 companies that are publicly traded in this country. And as you can see, the bigger blocks are the ones that carry the most weight. And the Magnificent Seven, which Nvidia being the biggest block, happens to be the biggest company and the one that's getting the most attention just because of the AI boom and everything in between. So as long as Nvidia, Microsoft, Apple, Google, Meta, and Amazon and Tesla continue to remain the primary catalyst for these entire 500 companies, everything is going to be hunky-dory. But at the moment that something breaks, something gives, and these 7 huge blocks that are all in the green are no longer propping things up, there's going to be a major correction. And what do I mean by that? Nvidia stocks stumble is hardly a reckoning of AI spending. So this headline here, the way this narrative is formed is that it's not just Nvidia that should be the focal point of this AI boom. And so what this tells me is that they're trying to create the narrative that there'll be more spending coming. So as you can see on the screen here, the guy's talking about Nvidia's share price down 3%. They're trying to say that we're nowhere near the AI boom. So don't just focus on the price action of Nvidia, because there's a lot more coming. And if a lot more comes the way that they're forecasting, then the S&P 500 total index valuation will continue to rise, further creating that gap between the 7 and the 493 other companies that are literally not performing whatsoever. Therefore, there will be more millionaires minted in the days ahead. But as long as that remains, it's fine. But the day that it doesn't, that will be the day that everybody wakes up to the paper wealth that they see on their screens when they log in, and it tell them that they are experiencing these astronomical gains. Because as of right now, Nvidia is the driving force for all these newly minted millionaires. I'm going to show you how and why that is. So keeping it moving here. So entitling this, I was like, okay, say the Magnificent Seven grips the 401k dream. So literally, right now we're having a creation of what is looked at as all-time high in 401k millionaires. And my point in saying all this is that it's driven by the magnificent sevens. As long as they remain stable, the 401k millionaires will probably continue to increase. And so if all their wealth is predominantly based upon what their 401k says, maybe some home ownership, stuff like that, they also consider, then the confidence in the system will continue to go on, but it can't last forever. And that's what I want to get at. And when it corrects based upon previous events, it's going to be monumental, historical in nature. So let me just get into more things. So a mirage. I was like, okay, so if this 401k is an illusion, if it's something that is not really tangible, but then again, it's something that's real because it is a financial product that is appreciating in nominal terms. So there is something there. But then at the end of the day, it's all on a ledger, on a server, inside of your hedge fund or in your broker account. And that's where it exists. And so I just use the word mirage. And number two, definition two says something illusory without substance or reality. And that's what I wanted to talk about when it comes to these 401k and 403bs, based upon the type of price action we're seeing in those accounts there. And so just to let you know how interesting all this is going to be, actually, okay, I got the wrong screen up here. Give me a second here. But we're talking to myself. But in trying to really paint a picture for this 401k mirage, as I put it, I had to look up the definition just to make sure it's something suitable. And so as you can see here, it says something illusory without substance or reality. And that goes into the idea that just digits on a screen can be considered something without substance or reality, especially if it's hinging on just seven companies that make up the Magnificent Seven. And so to keep it moving, clearly there's something underway based upon activity from Uncle Warren. And so Buffett's Berkshire Hathaway hits a $1 trillion market value, first U.S. company outside of tech to do so. And this is as a result of a lot of confidence in Berkshire Hathaway as Warren Buffett sells off pretty much everything that he believes may not be performing well. That includes the banking sector, a little bit of the tech sector. So he's selling off shares in companies and he's getting actual cash piled up for some type of major correction that he believes is coming. And so it says, unlike the 6 other companies in the $1 trillion club, Apple, Nvidia, Microsoft, Apple, Amazon, Meta, Berkshire is known for its old economy focus as the owner of BNSE, Railroad, Dairy Queen, whatever. It's what is Uncle Warren's plan? We talked about that, I think, a little bit yesterday. Basically, he's getting ready for that day of correction that I'm about to get at in a minute. So just abnormal activity in a world of overly inflated and overvalued companies is something I want to pay attention to. And so why is that? Here's an article that caught my attention today. It says total number of 401k millionaires hits a record high. And so I'm thinking like, okay, we also know that there's also an all-time high in distressed hardships as well. So what gives? Let's talk about this. And so here's this article from Fortune. Just the narrative is designed to probably come across to your average retail investor. And they're saying like, man, like a lot of people are out here making millions. And so let me increase my allocation to my contribution so that I too can reap the rewards of all this activity in the stock market. But then again, when you look at these figures here, it's a very small amount of people. And so I've talked about the retirement crisis before, but the people who are now newly minted millionaires as a result of the S&P 500, Nvidia in particular, and all the other tech companies, it's so small that it's very insignificant to the total portion of investors. But then again, they wanted to highlight this as if this is like going to be the new trend or something that people don't want to miss out on. So it's going to suck a lot more people into contributing more with the hopes of being able to reach that millionaire status. And so real quick here, let me share just some things. Let me know, make sure I'm on the right screen, make sure I'm on the screen. Okay, so make sure get myself out of the way here. Okay, so real quick here, just thumb through some things just because I'm trying to build up a case as to why this is all a part of the mirage to keep people's funds contained in the system so that the game can continue on. And with them, meaning the ones that are the majority shareholders in these companies benefiting the most. And in particular, Nvidia and their employees. It says more than 34,000 millionaires were created in the second quarter of 2024. So 34,000 millionaires were created. So literally people who crossed that 7-figure threshold within this past year here. And so mind you, out of a population of 300 something million people plus, that's basically what 10%, if that. And so, I'm sorry, that's 1%. What am I talking about? Get my math right. That's about 1% of the total population that would be considered as 401k millionaires. And so let me see here. Keep it moving, keep it moving, keep it moving. Yeah, make sure get my math right. Yeah. So a new report from Fidelity says, and also let me know if my math is off, just because on the fly it's hard to put all this thought together and keep my narrative going. But it says a new report from Fidelity says the periods of April through June saw a number of 401k and IRA holders hit the millionaire mark. The number of 401k holders whose balance topped 1 million was up 2.5 from Q1, jumping from 485,000 to 497,000. And so when you factor in the 401k and the IRA, within the last year, we have an increase of what is that? Say 12,000 or so. It says among IRA contributors, the number jumped 6%. So it says, although increases were modest, retirement savers in the second quarter of 2024 benefited from the continued upswing of the previous quarter when contribution levels and average account balances reached record highs. It says at the end of the second quarter, the average balance of a 401k, the average balance of a 401k millionaire stood at 1.59, up from 1.58. It says average balances for more than 48 million IRA, 401k, 403b accounts managers were, of course, much lower, but also saw gains. So 48 million IRA, 401k, and 403b accounts were much lower, meaning nowhere near millionaire status. So the average IRA company said had a balance of 129,000, while the average 401k stood at 127,000. So that small 1% in millionaire status saw an uptick of approximately, as it mentioned here, a nice little small 2.5% increase. But then the average person, the other 99, 98% of those that are investing for their retirement are approximately $127,000. And we all know, based upon looking out in the future, that is very small compared to what the average person might need, depending on where you're located and, of course, your spending habits. But that was a 14% improvement from a year ago for IRA holders and a 13% jump from 401k holders. And so the reason I mention this is because all this new millionaire talk comes on the heels of the S&P 500 being at all-time highs, being led and propped up by the Magnificent Seven. And so if there was no Magnificent Seven, and if things were in more realistic valuations, there wouldn't be all these paper millionaires as well. And as I mentioned, it feels good when things are going up, but then again, as always, what goes up must come down. And that's going to be the problem that a lot of people will experience if they're solely basing their financial future upon paper wealth inside of the system itself based upon stock performance. And so to keep this moving, why I mention all this, because on top of all these newly minted millionaires, we're also having newly minted hardships. It says, what is a 401k hardship withdrawal alternative to borrowing? So literally, this is at the same time that article came out about all-time new high millionaires, this also came out about hardship withdrawal. So the average person that are beneath that $1 million status, the other 97, 98% of investors in these Fidelity programs and Vanguards, they're the ones that are tapping into that $127,000 to $150,000 average 401k holdings. And so it just goes to show those who have millionaire status more than likely may have a cash cushion or something, and those who are at the majority, 120,000 or so, don't have that type of cushion where they're the ones tapping in. So it's a very lopsided investment structure in and of itself. But real quick here, it says many retirement plan participants have kept their hands off their 401k funds in recent years, but recent data from Vanguard shows that savers may be having a change of heart. It says experts at Vanguard observed a slight uptick in new loans, non-hardship withdrawals, and hardship withdrawals, with hardship withdrawals returning to a 5-year high. The research showed that 4% of the account holders who had access to their non-hardships initiated one in 2023 compared to 3.6 2024. So 2022, there was 3.6 people who had access to be able to take a hardship. They took advantage of it. And then in 2023, 4%. And it's my suspicion that in 2024, when we look back and look at these figures, it's going to be maybe 5-6%, give or take, or higher. and go on from there. It says the recent increase in household drawings, the recent uptick in household drawings on their employer-sponsored retirement accounts could be a sign of some deterioration in the financial health of the U.S. consumer. So once again, it says could be a sign. But then again, you have to, for someone in the financial realm, you have to be more optimistic than pessimistic. So could be a sign is more, it is a sign that there's a lot of hardships just because the economy is not as hunky-dory in a whole as they would like for it to believe, us to believe. But it says here, when you dip into your 401k, the money will fall into one of three categories: hardship, non-hardship, 401k, a loan, and go from there. And so just to give you some more figures here, it says not all plans and hardship withdrawals or loans. When plans do offer these options, your employer can determine the terms, such as if there's a cap on how much you can take. However, the IRS term loans do not more than $50,000 or 50% of your invested balance, whichever is less, with the caveat that you can borrow that much, borrow at least $10,000. So imagine borrowing from yourself and having to pay that back, or you're going to get taxed on it. So just more proof that millionaire status is for the small few, the 1 to 2% of retirees that are investing in the 401k, 401(k), and IRAs, while the other 98% are also experiencing an uptick and not necessarily enjoying the full benefits of this overly valued S&P 500 driven by the Nvidia. And on top of that, just to highlight more of this millionaire narrative that I'm trying to paint here, how it's unequally balanced and not sustainable. Nvidia employees often work 7 days a week and until 2 a.m., but the golden handcuffs keep them tied to the company. And this has everything to do with the fact that, let me share this with you here. Next article. Nvidia stock surge meant new employee millionaires, but many can't yet enjoy their wealth. So it's good to say every employee, or I think a good percentage of them, let's get into it. The stock surge of Nvidia is enjoying largely because of its dominance in AI. It has created quite a few new millionaires among the company's employees. Unfortunately, many of them cannot yet enjoy the newfound wealth and still work long hours and days. It says Nvidia stock has risen more than 3,775% since 2019, meaning employees who receive stock grants as compensation have quickly become millionaires. And so we all know that, I've mentioned this before, how a lot of the executive board in Nvidia have been taking chips off the table because they have to report their quarterly activity. And so they have, as the price has been going higher, they have been exiting out. And in this other article here, let me grab it. It goes to show that one of the employees here happened to have got out at the right time. It says, through NVIDIA's stock purchase plan, employees can contribute up to 50% of their salary to buy company shares at 50% discount. One mid-level employee who bought in for 18 years reportedly retired with shares worth $62 million. So this employee here who was at NVIDIA for 18 years, they got out in time and is enjoying the fruits of their hard-earned time and labor in that company. But the whole point of mentioning this whole millionaire talk is that NVIDIA's millionaires are experiencing the fruits of a 3,000 plus increase over the last 5 years, artificially stimulated, might I add. At the same time, the average investor in 401ks, that 1 to 2%, has also reaped the benefits of an overly inflated S&P as well. And therefore, everything is trending upward. It's all fine and good. But then again, it can't remain that way forever for the Nvidia millionaires as well as the 401k millionaires, because it's all paper digits on a screen with not much real reality substance behind it. Even though these are valid companies, they're propped up artificially. Therefore, they're all tech sector. They're all tech-based companies that don't really produce real-world tangible goods that we actually need at this current moment, even though there are opportunities in AI and robotics, but we haven't seen nowhere near where it's going to end up being in the future. So one thing I want to show you here is, based upon what the Federal Reserve is currently working to try to maintain, which is employment gain. They're really concerned with the labor market, not wanting things to cool off too much, but then again, they want a steady uptick in unemployment. So that puts more of a decrease on the CPI figure that they're looking to use as their reason to cut perhaps next month. And so in the meantime, keeping an eye on unemployment, even though those figures are not real, they're fake. As a result of a correction or cool off or whatever, unemployment always ticks up. And when unemployment ticks up, therefore, indexes often cool off or correct or crash, as it's going to be referred to. And so, with all these newly minted millionaires in the 401k game, as well as in Nvidia, it's not going to last forever. There will be a day of correction. And that's the difference between being in a centrally controlled, digital, paper and illusionary type of world, i.e., through stocks and bonds and stuff of that nature, and being in the physical asset realm, whether it be intangible assets such as real estate or whatever other real world instruments, but in particular gold and silver as monetary mediums, they're all going to experience somewhat of a correction when things cool off. But then again, from a global standpoint, we all know, and I do believe that gold and silver will see some type of surge that we have never witnessed before. And that's where I want people to be more in tune with finding that happy medium balance. If you're going to have S&P exposure, because it will continue to go up, definitely consider how and when it will correct. And do you want to go for the full ride up and full ride down, or will you maneuver, i.e., like most people, the average person that's participating, they're traders. They're not actually long-term holding investors outside of the working population that are forced to contribute to their 401k and 403bs as an incentive for employment's sake. Those are the ones that are going to be left holding the bag. They won't be able to get out in time because they, unfortunately, want to take that penalty of getting out. But then again, as I mentioned to start this off, you don't have to take a penalty if you transfer it over into precious metals. And that's why I started off with talking about Colonial's Metals Group, because literally you can take your entire portfolio and reallocate it into something physical, and you'd be more than fine with not taking much of a hit or a hit at all. So just another something there. But the reason I mention that is because the S&P will go up and it must come down. And so based upon history here, there's a lot we can learn. So this is a graph from Game of Trades, and they do a good job of putting together the actual statistics in visual form so people can see the types of corrections that we've had as a result of unemployment rates surging. And so just going back throughout history, we got the 70s all the way to the 80s. And as of the QE phase, where we're in the 2009 and beyond, where things are completely abnormal, just look at the previous upticks in unemployment. So the black line is unemployment. When it shot up in the early 70s, the S&P cooled off 50%. When it shot up in the late 70s, S&P cooled off, as you can see here, 30%. When it shot up in the early 80s, S&P cooled off, as you can see, about 30% here. And then in the 2000 .com area, when the when employment shot up around here, the S&P came down about 50 or so percent. And of course, it always returned back and exceeded. But when you look at the amount of currency created to artificially inflate it, it has led to greater inflation, as well as the dilution of purchasing power. So you may on a screen, it might appear as if your nominal account has increased in value, but in actuality, relative to what you can purchase with it, it's remained the same or actually decreased, because overall cost to sustain ourselves, housing, food, water, shelter, has gone up substantially compared to those meager gains that a lot of the average person is experiencing. And even I've done videos before talking about how when the baby boomers who suffered severely during the last GFC event, like they never were able to fully recoup, because since then, whatever gains they have received, the cost of living has far overshot those gains to where it doesn't even compare in a sense, because once again, they can't actually reap the full benefits of those gains that they've received, because their fixed income or portion doesn't really meet all their needs. And that's where we're witnessing a shakeup in the retirement game. And a lot of people in Florida returning back home to where they originated from because of the cost of everything in Florida and everything between. So anyway, long story short. So as you can see here, when you look at after the .com correction, employment shot through the roof. We're looking at about, you got a maybe 10% or so around 09, 2010 timeframe. And of course, it says here the S&P corrected close to 60%. And so we haven't seen a correction, nothing like that since. And so even this correction that took place in 2020 as a result of this anomaly for that 15-day to slow the spread was very small in comparison to where we're at now. So with the S&P at all-time high territory, and here we are at the very bottom, where we're witnessing a slow and gradual uptick of unemployment. It's small now, But then again, how long will it remain down here around 4.3%? They last told us, if you trust those figures. But based upon all the videos I've done highlighting how the big three here in Detroit laying off massively, we got the tech sector laying off, and I got just there's more layoffs going on that I actually report on. But then again, if you follow how severe it is, so clearly that 4.3 that they gave us from the BLS is understated. So as it takes off, because of companies deciding to downsize and due to all the cramping, then we got this political season here where whether the higher tariffs on the Trump camp or unrealized capital gains tax and other taxes from the Harris side of the fence, it's going to equal more inflation regardless on both sides of the aisle. So therefore, companies are going to have to make tough decisions. So unemployment will surge. And if it surges anywhere similar to what it has over the last several decades, if you just averaged all that out, we went straight across the board here, we're looking at 8-9% unemployment. If you average all these corrections out throughout the last 50 some years, we're looking at 9%. And if we get 9%, just based upon what happened in the GFC, there was a 60% or so correction in the S&P 500. The entire, all these magnificent seven companies, imagine that they correct by 60 to 7%. It won't stop there, because then that right there will equal some type of global contagion. And so all the air in this bubble will be completely shattered. And so it can literally shoot past 60%, in my opinion, and end up somewhere closer to 70, 80%. A lot of people are forecasting. In particular, we have, what's his name? I just did a video on him the other day. What's the guy's name? I can't think of his name. Drawing a blank. Harry Dent is one. He's been calling for 70, 80% for a decade now. Eventually, he's going to be right. And then we have the other gentleman, David Hunt, I think, if I'm not mistaken. He's saying 80 to 90%. And so there's a lot of people who have been in the markets 30, 40 years calling for 80 to 90% correction in the S&P 500. What do you think is going to happen to all those paper millionaires? Like, you literally chop all that in half, 80, 90%. That's how bad things could end up being for a lot of people that solely look at their financial future in USD or digital representations on a screen and not actually consider their wealth in different pockets. You have your tangible wealth, whether it be if you measure it in ounces, kilos, wherever you're at financially speaking, or tonnage if you're one of those individuals, in comparison to those who focus solely on the percentages of increase in their brokerage accounts when it comes to their retirement portfolios or their bond holdings and things of that nature, and whatever other pools of measurement that people use for their wealth metrics, put it like that. So once again, these are some things that I think are really concerning, because the mainstream narrative is only going to be stock goes up. They'll never talk about the cooling off period or the correction period, and then the response that will come from that. So the S&P, if it corrects 80, 90%, it's good to say that once the Treasury and the Fed collaborate again, then it gets into where I say it's going to take at least 10 trillion just to try to resuscitate the S&P, like just to shock it real quick, just to get the heart back beaten, if I was to use an analogy of Uncle Sam on his back. And then that's not going to be enough to sustain it. So they're going to have to put another 10 trillion. So we're looking at 20 trillion at a minimum that will go back into these markets. And of course, S&P, whatever it is at right now, pointage wise. So if it's say close to 6,400 points of the S&P 500, it could probably double. We can see 10,000 S&P, 12,000 S&P, Dow at 70,000 Dow, and all these other metrics, just because the currency's running into these companies. But then also think about where gold and silver is going to go, because it's going to be a global race to safety, literally, because everybody and their mother will know that even though if you log into your account, it went from, say, if you had $1 million in there, it shot down to 200, 150,000 in valuation of your portfolio that you hold. They inject 10, 20 trillion back into it. It reinflates it back up. So now you're looking at, you go from 1.1 million as a newly minted millionaire down to 200,000, if not lower. So all of a sudden it shoots back up, and there's going to be a lot of panic selling in between. So a lot of people are going to sell their way out of that anyway before it hits that bottom mark. But then for those who hold, the long-term investors who don't know any other thing but to hold, they can literally see that million go from 1.1 to 2.75 or $3 million and be like, man, I'm $3 million richer as a result of this recovery that whatever president's in office is doing, but not realizing that gas has gone up threefold, tenfold, fivefold. Every aspect of your life will increase four, five, sixfold. So that 3 million that person has on a screen, literally that they can't access right away, will literally be somewhat relative to what the cost is at that current moment. They won't be much farther ahead. They'll actually be behind because their currency will be that much more diluted in real terms as far as what you can purchase. So this is a disconnect between financial advice, I believe, and what I consider monetary literacy. Based upon the way things are going, they have to continue to expand the monetary base in ways, any way they can, to prop things up to make it appear as if everything's stable. So 10, 20 trillion as emergency response just beginning. And that's the destruction of our currency. The Federal Reserve note will never be the same again because people won't trust it. Then they're going to have to come out with some type of alternative in the form of a digital whatever. And it's going to be done in a different manner completely than what we know before. The financial world will never be the same again as a result of this. And I even think the word retirement will not sit well in a lot of people's psyche because they're going to think, okay, I worked hard to save with the idea that there being compounding interest added to my account. But in actuality, compound inflation, it far surpasses interest in an inflated artificial world. And compounding interest versus compound inflation will just shoot through the roof to where people can be like, what am I even doing this for? What am I saving for? And what am I saving in is going to be the biggest question. And that's why gold and silver will be there, even though if Kamala gets in, which I believe she probably will, unrealized capital gains, they're going to find a way to try to have people spend that to absorb some of that liquidity back in the system to also counter the Federal Reserve's 10, 20 trillion that they create. So these are just me. This is just me talking through scenarios of what could be in a very dysfunctional, unstable world. Yeah, but then again, I hope I'm wrong, but you never know. But in the meantime, do what you can do to protect, preserve, and hopefully prosper in the days ahead as far as just being ahead of the curve, not following conventional advice, in my opinion, because it's designed to keep your currency in the system and they profit off of fees that they charge you for taking care of your account on your behalf. So it's never really like you're walking away as a winner in this whole little charades here. But anyway, that's just my thoughts. Wanted to share some things in reference to this whole fake illusionary millionaire status stuff. Curious to hear your guys' thoughts. What are you thinking about these newly minted millionaires? And if you were a newly minted millionaire in paper terms, would you get out now or would you ride the wave until you get the first sign of a correction, which you'll never be able to time it? So would you get out early or what? So these are things I think people should really consider. And that's why I think you should seek financial advice from those who think somewhat differently. And I'm always going to continue to point back to my people at Colonials Metals Group because literally just having a talk with the owner the other day about all the activity he's seen, being able to take your nominal gains in stocks and bonds and roll it into metals would be a way to, for sure, fireproof the losses that you will take because you'll actually have something physical you own. I think people will really begin to question a lot of things once they realize that the whole idea that you'll own nothing and be happy with it is literally tied into illusionary mirage type figures on screens because it looks good going up, but then again, it's a ledger, it's computer screen, it's digits, it's software program, it's nothing tangibly there. And that's what people going to really realize once they lose everything in the digital world, perhaps. So anyway, just sharing my thoughts. Kamala flip-flop Harris. Yeah, the whole CNN stuff was, yeah, it's a joke. It's a joke. You know what I mean? Just, I don't pay it no mind. I didn't even listen to it. Just listen to some sound bites just because I know what she's going to say. And I know how much the system is in support of her. So they're not going to give her nothing hard. And she could actually tell the truth and they'll spin it to make it seem like it's beneficial for our country. And so once again, I think no matter what, our country's screwed on both sides of the aisle because the debt, 35 trillion plus, and then 100, 200,000 unfunded liabilities. AI and robotics is not going to grow us out of that. There has to be a correction in the currency, i.e. some type of debt default and revaluation of our currency, which will show up in gold and silver prices. And then domestically, our currency will be rebranded to some form of a CBDC. And that'll be what people are forced to use, along with all the digital tyranny that comes with that, because people aren't going to accept it willingly, but they'll be forced to. And if you lost everything, you'll take whatever you can get your hands on to try to recoup what you did lose. So yeah, it's unfortunate that this is all scripted out on both sides of the aisle. That's why I'm not holding my breath saying that Trump is going to make America great again. It's too late. America's only great or as good as its currency. And for those who may not know, may be new to the game, I never knew who might be new, but I want to share with you just some visual aids that I'm going to continue to put out there, because it doesn't really matter, as I mentioned before, who wins. Neither candidate can put more purchasing power back into your pocket. And if you want to sustain your livelihood and preserve your financial future, you're going to need purchasing power, where you can sock away something for a rainy day and put it in something where it can preferably grow. But here we got on the screen what is not on the ballot this upcoming November. Whether Kamala here or Trump is here, we see the trajectory of what already occurred. He or she will be the 47th president of our country and 20th of this current Federal Reserve led system. And as you can see here, we're already at a mere penny or two on a single dollar. And this next presidential election, we're going to go sub-zero, flat out. You can't deny it. And the rest is off to the horses, man. So yeah, pay attention to what they're not telling you. That's your purchasing power. You will not get none of that from neither one of them. So it's up to you. And for those who might be tuning in, one thing I mentioned before about, Trump is better than the opposite, but then again, he's a part of the problem as well, because his solution happens to be with more U.S. debt, stable U.S. debt, i.e. the rebranding of our currency through stable coins and prolonging the debt-based system, because he's benefited off of properly. And for me personally, one of the biggest benefits that I think I probably have gotten from the Trump administration happens to be in something that wasn't even intended to benefit me. It's what I have on the screen here. This Trump coin. I like this Trump coin more than I actually like what he is selling the American populace on what he can do. And so just stack these here. You'll be a beneficiary of Trump's monetary malfeasance, because once again, he only suggests solutions within the same paradigm that created the problem. So grabbing some of these right here will put you in a good place in history to benefit from some of Trump's foolishness. But anyway, if you only think you have the choice between left and right, then you're stuck in the middle with whatever comes your way from both sides of the aisle, rather than trying to not depend on either one of them. Be grateful for what God is doing in your life and looking for opportunities outside of all the chaos here, because for those who are awake and aware, there's opportunities out here. Now you got to go find them. And most importantly, in a world where things are unraveling, look for ways to find value, to inform people, educate people, serve people, and you'll have your needs met plus some. So anyway, be blessed, be safe. Appreciate everybody for hanging out with me. Says thanks for the great content. Appreciate you, brother. Thank you for your love. And if you haven't already, hit that thumbs up button, man. Show your loves for the channel. Just trying to give people a different perspective on what's really out here, so that people won't be caught blindsided. Because if you only listen to your favorite cable news stations, you're on the losing side, in my opinion. But all right, people, be blessed, be safe. Shalom.